any spend that you made on a credit card did not come under this LR scheme. The myth is, hey, unless I have 2,000 crores, I will not need a family CFO. That's the myth, right? Well, I don't think that's true, because it really depends on how complex your family structure is and what your family needs is.
Is there an advantage, Sreedhar, of having an Indian family office for an NRI who otherwise may probably have their own version of their family office in their country?
You'd be surprised, many wealthy families don't even have wills, So effectively, we act as a custodian to the family.
Welcome to this podcast of Keeping Wealth Wise. I'm Vasanthi Hariprakash with you. And in the next few seconds, you're going to be listening to a conversation of mine with a gentleman who's been deeply embedded into the world of finance. Someone who is a CFO at Entrust. Sreedhar, welcome to the show.
Hi, thanks Vasanthi. Thank you for having me here.
Sreedhar, you are someone who helps people understand aspects of wealth, of finance, of operations. You are the CFO. So first of all, when you do your everyday role, how is a day in your life like?
So typically it starts off with, your, you want to get very operational, or you just want to know how
Just
much time
just
is
a day in your
spent over,
life. Yeah. Give us a peek into that, because if you ask me, Vasanthi, what's your day like? Well, it involves hopping sometimes from Bangalore into a rural hinterland, meeting people across the spectrum. It could be a farmer, it could be a head of state, but in your case, it's in trying to help people manage their wealth better. You meet what kind of people? What's your day like?
Okay. So I've been fortunate that way, because while my basic job is, it's the underlining skill set that's required is finance, accounts, taxation. The kind of people I meet are different, right? Someone's an entrepreneur, someone's a highly paid CEO or a CXO, or someone's just retired and wants to see how to manage his wealth and his finances. And when I'm talking to corporates, someone might be in information and technology sector, someone might be running a marketplace for himself. I deal with clients who are manufacturing beverage industry. So there's a various kind of people that I deal with. So that's what keeps us motivated in terms of, we get to do and learn different things.
But the shared
But
CFO services as a vertical,
right.
does this have a precedent? Is this a new phenomenon that's a part of the multifamily offices?
See, it's new and old, because traditionally when someone says CFO, you think of a guy who understands numbers, and he'll draw a P&L for you and say, hey, you're making a profit, you're making a loss, or this is what your cash flow is,
Exactly.
right? And you'd associate a CFO with a corporate, right? That's a traditional CFO. But how we looked at this was, think of a high net worth individual family. The family also has finances, right? So why not institutionalize the requirements of finance and compliance of a family like how you would do to a corporate? So we started doing something called acting as a CFO for the family, right? Now there's a head of the family who's earning money. It might be the husband, it might be the wife. This combined income, different sorts of income. This they invest in shares. They have a business that they're running, professional income, or
Yeah.
they might be on boards of different companies. But then, who's managing all this finance, right? It's not structured, right? More often than not, a family runs it on rule of thumb. Hey, I know I'm earning 100, I can spend 50, and I want to save 50, right? But it's very haphazard. So we thought we'll bring a structure to that, right? Now we have something called investment advisory, where the balance 50 that you want to invest slash spend, where are you going to invest? That is what an investment advisor would take care of. But who is accounting for it,
Yeah.
right? And each family would typically have a chartered accountant who's doing the tax filing. But who gives him that information, right? So if it's a company, you have a finance team, you have an accounts team, you have a CFO. He does all of this and takes these reports either to the board and to the statutory auditor of the company. That doesn't happen in a family, right? So what we are trying to do is we create what you would have otherwise done for a corporate. We do that for a family. We become a single point of contact between the family and the tax filer or a tax consultant of the family. So somebody has to feed them information.
Yeah.
Is that information correct? Is that information complete? A family will have 10 different fund managers. Who's going to pull all that information? Right?
So when you go into a family as the CFO,
Right.
what is the starting process? Like what you probably call as onboarding.
Right.
What goes into that?
We start off with basics. Understand what the family dynamics is, structure of the family, what kind of income they have, the source of income. Is it business income? Is it salary income? And then we understand what is it that they need. I'll give you. See, there are examples where I have families that's building a house. Typically, if you were to build a factory, you would have a budget, right? You'd have a budget, and you also monitor it on a weekly basis, monthly basis, quarterly basis, whether it's as per budget. Have you overshot?
Yeah.
Why don't you do that for your family as well? So each family's requirement is different. Like we have families where people do invest outside of India. They use a route called LRS, right? Where you're allowed to invest about $2.5 lakh every year outside of India. What are the rules and regulations? Is that being done the way it should be done? All of these things come under a family CFO's this thing. In fact, we have families where we draw P&L cash flow for the family
I
and tell
see.
them, hey, your income was this. This is your outflow. This is your expected outflow.
And
You
what
have
is usually the reaction? Because
a lot of times you'd be surprised, they'd be shocked. They're like, no, am I spending so much money? Usually they find this at the end of the year, but we manage to tell them upfront. And there are a lot of other small things like your insurance payment. You know, the typical this thing is you have a reminder, or the agent calls you to remind you, hey, your premium is due.
Yeah.
It could be health insurance, it could be
Yeah.
your vehicle insurance. We as a finance team of the family, as a CFO of the family, we let them know in advance that A, there's something due. B, you need to make sure there's liquidity to honor that payment. And and we've seen families where they're underinsured, right? We even talk of things like this. We tell them, hey, looks like your insurance cover is not good enough. Why don't you get this cover? So on and so forth. It makes it a lot easier. See, the whole point is we want, there's more of a lifestyle choice. It's
Yeah.
more of a lifestyle service. Do you want to waste time? I'm using the word waste because for the family, talking to an auditor, getting his ITR filed,
yeah.
instead of enjoying his vacation is waste of time, right?
Yes,
So
yes.
so we try to be that single point of contact where the family gets to do what they want. It could be anything, right?
Yeah.
It could be just spending time with family, or they have a business to take care of, or they like music, they like golf, whatever it is.
I can almost picture this liberating feel of when the CFO takes over that role, because
right.
it's very painful to file the GST returns,
That's
to have the tax ones. So the role you have put out for the CFO is sort of all encompassing.
That's right.
If you are really looking at it from a family point of view, it solves many problems for them. Does this come as a default offering from any multifamily office, or is it that Entrust is offering this as a vertical for people who?
See, most family offices that I know of are very strong and focus more on wealth management only. But what we've realized over the time is this much more than wealth management. Succession planning. Okay, does your family need a family trust? Are the wills in place? Do you need a family trust? If yes, who should be a settlor?
When do you bring this typically into the conversation when a client is on your side, is onboarded? And I mean, things like succession planning are almost, I would imagine, delicate issues. Many Indians are not known to think of the future or that delegation.
See, usually we build a very strong relation with the client anywhere between 12 to 18 months. That's the kind of time it takes to see, understand. See, at the end of
It's
the
a
day,
monthly review basis.
depends. Usually we start off with monthly and move to quarterly. But we have clients who meet us once in 6 months because they know they get their regular updates anyway. But a face-to-face review, while we start off with once a month, once the client gets comfortable, they understand.
Yeah.
We understand more than they understanding us. We understanding what they need, and till such time we are sure we're delivering what they need. It's usually a month on month, and then it moves to quarterly updates. And from a perspective of timing, see, the moment we onboard our first, this thing is to understand what is it that the family wants, right? Well, wealth management is one of them. Most of the families would also want to see how their wealth, hard earned money transforms to the next generation. That should be done in a legit way, legal way, and smooth, in a smooth way. Easiest form is will, but is that enough? Do you need a trust? And is there enough scale? You should also look at cost versus benefit. Do you have enough wealth? Does it really warrant a trust? We don't sell trust as a product. We advise that only if they need it. Otherwise, we'd say, hey, let's do a will. But nevertheless, you'd be surprised. Many wealthy families don't even have wills. So effectively, we act as a custodian to the family. That's our job. Once we take over, and if it's a true blue family office, there are many things that you wouldn't even have signed for. A lot of things you don't know that this is going to happen. But
Yeah.
since we are by their side and we understand this, we always become a single point of contact, and we land up servicing them and taking care of their needs.
So, Sridhar, I'm guessing it also depends on what phase the family itself is in and their wealth is. In an episode with Raj Mohan as a founder, managing founder of Entrust, the scope we are looking at is also the philosophy of money.
That's right.
Also, what I call what I would like at least to be dealt with when we are talking about episodes of keeping wealth wise is wealth creation itself. I mean, millions of Indians are now looking at upwardly mobile incomes, more spending power,
Right.
and therefore there is a concept of okay, how do they even get into a wealth creation stage, and then of course to grow it, and then to protect it, and then the legacy part.
Right.
So, for instance, you mentioned the transmission into the next generation and how best it can be done. One of the questions that really comes to mind is that the mindset of the family itself. Typically, in your experience, is it that there is a single decision maker within the family offices? Sometimes a patriarch, but probably if you're looking at a newer generation of wealth creators, it's somebody who's probably been acquired by whose company has been acquired by an external agent who's probably got new wealth
Right.
on their hands. What is the mindset we are talking about, and how much of convincing really takes, and who are the decision makers?
See, I agree to what you're saying. Usually, there's one member of the family who's a decision maker, but when it comes to matters of wills and trusts and how the children or aged parents' interests are protected, we would advise that to be a common decision. So usually, what we do is we sit with the entire family. That's what we usually push for.
So the
We hear
spouse, the parents, the
yes,
children.
yes. We hear everybody out, and then we come to a conclusion on what is it that they want to achieve, and then suggest a way forward. That's how it works.
One of the other parts that probably this book, which is Multi-Family Office by Rajmohan Krishnan, referencing this book for the types of CFOs or because that is also a point of interest, right? That we are talking about CFO services, and I'm just going to read out this part. I found it interesting, where Raj Mohan says that recently a client of Entrust unwittingly shopped using their debit card instead of credit card while on an overseas tour.
I
As
remember this case.
you do?
Yeah, yeah. So I'll tell you what happened. This is a little technical, but
Sure.
just bear with me. So there's something called an LRS scheme, right? It's for Indians. It gives them the ability to invest outside of India, but there's a cap. You can't take more than $2.5 lakh per year outside of India. That's the law. All right. Surprisingly, this is going to change very soon. But as of now, any spend that you made on a credit card did not come under this LRS scheme,
Oh, I see.
right? So what people usually do, they know their limit is 2.5 lakhs, or they have an advisor like us who's monitoring that, right? And usually this is a financial year calculation. So in the first week of April, they usually transfer their limit of eligibility of 2.5 lakhs outside of India to make various investments as per their risk profile, they make the investment outside of India, which means that they're done with. So you're not allowed to spend more in terms of forex. You can't spend
Right.
foreign currency money.
Yeah.
So when they're traveling outside, you still have some expenditure, right? So let's say you've spent only $2,000 in your. If you've invested $2,000, you still have $50,000 that you can spend slash invest, right? So people started using credit card instead of. So that since that is not under the purview of LRS, which again is going to change, but as of now it's not under the purview of LRS. It didn't matter how much you spent on your credit card. So we had this client who had exhausted his $2.5 lakh limit. I think he was in Dubai airport or somewhere. He just wanted to buy a bouquet for a friend he was meeting. He took his card from his wallet, which he assumed was a credit card. He swiped $300 bouquet, not a large amount. 1 week later, within a week, I think 2-3 days, he gets a letter from the AD, his banker, saying, "Hey, you violated your LRS limit.
Oh.
You spend more than what you should spend in foreign currency." The very fact that you're getting this thing from RBI or this thing, there's a panic situation. Might not. I mean, it's addressable, but still,
Absolutely.
you've
Yeah.
just suddenly, and you're a law-abiding
Abiding
citizen.
citizen.
My client's very clean, law-abiding. If there's a gray area, he'll always say, "Hey, pay extra tax, but I want to sleep, peacefully." That's the kind of people we deal with. Like, so we realized he had not used his credit card; he had used his debit card. Right? Such a small mistake could happen to anybody. Look, what do you do at that time? Who do you go to? Hey, I have a family CFO. It's his headache. Let him figure it out. We get a call. It's like, hey, this is what has happened. What do you do?
Okay.
Even we haven't done this before. It's not like I signed up assuming he's going to default on something, right? But you're a family office. So what do you do? Go to first principles. Yes, this is messed up. This is the violation of an RBI, right? Let's write to RBI. Very simple. We got a response also from RBI very quickly. They said, "Hey, you just have to, put an application, ask for compounding. We will condone it, as long as you've not created any asset out of it, and you please get that money back."
I see.
Thankfully, we had done that. The moment we realized that there was this thing, instead of while the overspend was $300 or something, we got $1,000 back. Because there was enough money outside of India. Over the years, we had curated something for it, so we got. So then we wrote back to RBI saying, "Hey, this was an honest mistake, and we've in fact got back the money as well, and we've not created any asset outside." I think this went on for a month and a half, and we had to pay like a nominal penalty of some 5,000 rupee or something very minimum, and it got solved. But imagine the client trying to do all this. I mean, he has
Yeah.
a lot of other issues to handle, which is takes a lot of his time.
So the CFO's role in the multifamily office within that setup is clearly very helpful. Where
Yes.
we've demonstrated use case here. So one is the tax complication part, but also when I look at the other offerings, besides the budget estimation, then the banking and the bill payment and the tax advisory, there's also the legal part.
Right.
So, what does it therefore take, Sreedhar, for you to be equipped to perform your role within this new challenges that keep coming up? My added question is, when you came into this, your own background was probably to work with startups at some point. So, how did you evolve into this role?
So again, I still continue to be closely associated with startups because a lot of my clients have invested in startups as well. While I'm managing their personal and family wealth, we also act as CFOs for the startups my clients have invested in.
Right.
So that's the corporate CFO services, which I can talk more in detail.
Sure.
But from coming to the family side, you did ask something about the legal part as well, right? So again, think of what a finance function would do for a corporate. We just replicated that for the family as well, which means a family may have multiple properties. Now it's not very common. I mean, it's not very uncommon for people to have more than 2-3 assets these days, right? You have an apartment where you live, you have 2-3 apartments. Basically you might use one as a weekend house, or to earn some passive income. You might have something as simple as a rent agreement with a new tenant that's coming. Who's going to draft you these agreements? Yes, there's a Google template. A lot of people usually go download something from Google, but that's not what you want to do, right? You wanted to
Yeah.
have some sanctity assigned to that, and you'd want a lawyer to draft it. We have an in-house lawyer; he does that. This is something very basic. Or if you're making an investment, a seed fund investment into a startup, I mean, who's going to draft your shareholders agreement? Yes, it's usually the lead investor, the company's lawyer will give you a shareholders investment, but your investment might be very small, where you know you might not have a lawyer immediately go see whether your interests are being protected. So we have a set of lawyers who will go through and say, hey, yes, you're interested, is protected. If not, what are the downfalls? You need someone to be by your side, and so you keep seeing legal documents everywhere, right? Something as small as your lease deed, you or once a year, once in 10 year kind of a transaction, one time transaction, like you're buying a new flat from not from a builder but from a secondary.
Yeah. Yeah.
So who's going to do the due diligence, and is the
So,
the
so how have these evolved from the time when you entered the industry? Let's say from the, if I have to take you back to a mid 2000s, when valuations of companies weren't really as crazy into digits as we now know them.
right,
From a simple thing to right now having multiple complexities.
right.
Uh, how has the industry itself of a multifamily office changed, or how is it adapting?
Yeah. So all the services are coming down under one roof. Like earlier, a family office was used only for wealth. The, for all other things, they had one person. To manage real estate, they would go to one broker. Um, and for for other tax advisors, they would go to their chartered accountant who's filing their income tax return. If there was a FEMA issue, then they would go to another FEMA expert who would do. So there were multiple stakeholders with whom a family had to interact with. But now there's one family office that will take care of everything. You know, in fact, we have clients whose house help salaries are also paid by us. The family has no idea. I know the family just comes and tells us, hey, I have a
Okay.
driver, I have a gardener, I have a house help, I have a nanny. This is their salary. That's it, right? So there's an accountant actually working on their what is their overtime. Of course, we have checks and balances in place. No payments happen without the approval, but we made it far more simple. So a family doesn't really need to bother about literally anything when it comes to finance and compliances. So it's taken care. So something as simple as a household salary to they investing in a startup and making sure the documentation is right.
So, we're talking about multiple needs. We have dealt with in this episode the family itself, then the startups, but then there are those who are technically not startups but who could still do with the services of a CFO.
Right.
We are sitting, I mean, in Bangalore, which is the SME capital.
Right.
Not very, you're looking at something like a Pina,
Right.
but there are a lot of people who cannot afford
Right.
to have a CFO. Probably there is an accountant at
Right.
some level, very simplistically
Right.
uh,
Right.
dealing with balance sheets. You're also looking at that segment.
Yes, I do. Mainly because I mean, a lot of these SMEs, I'm sure have the potential to even be unicorns, right? At some point of time. Like the founders are fantastic. They may be first generation or second generation, but they're very good at their work. But finance and legal is usually done by a rule of thumb, or they have an
Yeah.
accountant, or they have a chartered accountant who does their statutory auditor, who's also managing their books of accounts. And the only report that they're more keen or they're following right now is the cash flow. Do I have enough money for the next 1 month? And it ends there. See, there where we usually can add value is, hey, first set the, are the processes right? Are there checks and balances? And do you want to scale up to the next level? But, I've seen a lot of people in this SME segment, who've been in this business for 10, 15 years. They want to scale up now. If the scale up can be joining hands as a JV with someone, or see if they can get an outside investor, so that will fuel growth. They're doing 10, 20 crores of business, but very clearly they have the potential to reach 100 to 200 crores of business. What does that need? That needs capital, right? So how does one gear up for that? They need a strong CFO with them to advise them. Now, how are they going to raise money? Is it going to be through a debt from a bank, or is it going to be through equity, or is it going to be through another instrument, like a debenture, which is a loan first and then gets converted into equity? So these are things that where they would need a CFO's help. And the usually like CFO, or it's an expensive resource. Do you need it right
Exactly. I
now?
mean, I was about to
Right.
ask you
The
that.
first thing that they like,
It's
should I
also,
do? I need it right
yeah,
now.
yeah.
So what we suggest is, hey, engage with someone who's a fractional CFO, right? He won't be a full-time CFO with you, but since he's managing a lot of other companies, he'd be a part of your growth journey. He doesn't have to sit with you and spend 30 days with you,
I'm guessing the
right?
advantage of having a fractional CFO is that that experience also comes into play of
Exactly,
managing the other
exactly,
multiple.
exactly. So
Yeah.
it's just not the cost advantage. The person would have dealt with many other people like you in this industry or outside industry, so he's very relevant. He understands the ecosystem, so he would add much more value. It could be, see, I've worked on engagements where the founder just comes once a month without fail. It's a calendarized event. Every month he spends 2 hours with me and my team.
Hmm.
He tells us, hey, this is what I've done, this is what I intend to do.
What is your vision uh, from, let's say, beyond being the CFO and the role of Entrust to something that can actually take a whole sector like this, leapfrog, looking at it from India's big potential in the next decade?
See, we currently handling more than 30 startups, right?
And these are geography specific,
No,
or
it's not. It doesn't matter. What COVID has taught us is it doesn't matter where you are, you can still deliver
yeah.
what needs to be delivered, thankfully.
So it's not
So it's
necessarily,
not
yeah.
necessarily where
Is
you
it
work
Indian
out of.
families outside India?
Um, yes, yes, we are. There's a lot of NRIs who have investments in India, but and uh, being a global citizen, any income that arises out of India is taxed in India. Of course, there's a double taxation benefit and all that. So there needs to be a filing here. So we're taking care of that as well, mainly for the NRIs. Most it's usually a dividend income, capital gains from startups that they've invested in, and rental income. This is what uh, I've seen. So they need someone to guide them with all of that.
Is there an advantage, Sridhar, of having an Indian family office for an NRA who otherwise may probably have their own version of their, the family office in their country,
No,
let's say
it
in the
does.
US?
Yeah.
But I mean, of course, the taxation is that understanding of what India is. But I'm saying that is there also other advantages of being an Indian family office for
See, at least for Indian specific assets, it makes sense to work with someone who understands India, right? So yes, yes, it does matter, and this can integrate with the family office that he has outside of India, and it could work. You would just be an extension of the family office that he has outside of India.
So, while we go into the end of this conversation, we've been speaking about even more than let's say just a focused look at what it can mean for India
Right.
at some point of stage. But I really want you to share some tips for, let's say, people who are, whether they're MSMEs, startups, other sectors. But is there something that they should open their eyes to, and in engaging something like the CFO
Sure. So I'll
and
break it
family
into two
office?
again. For a family office, the myth is, hey, unless I have 2,000 crores, I will not need a family CFO. That's the myth, right? Well, I don't think that's true, because it really depends on how complex your family structure is and what your family needs is. Because again, you can engage in different levels, right? So I know of families who have a net worth of 50 crores, but they still need a family CFO because the kind of income they have, they need a lot of things to be
Is there like
managed.
a starting cutoff that you think?
Again, that's what I was trying to cut. There's no cutoff, but
Hmm.
the myth of you should have thousands of crores to have a setup like this is incorrect. I've seen families 40, 50 crores, but they actually need, um, you know, maybe not a large team, but they still need one person acting as a CFO, as a sounding off board for all the requirements they have. That's on the family side. On the corporate side, yes, anybody who doesn't have a CFO, see, they might have a finance controller or an accounts team, basic
Hmm.
bookkeeping team. But if you want to plan ahead, make sure you're compliant, and especially if you have plans of growing, getting an outside investor, and to represent them, to even make pitch decks to an outside investor is a very time consuming process. you have to make a business model, then go meet multiple investors. And after the investment is done, you have to keep answering his questions. So till such time you reach a stage, it can be pre-revenue, you might have zero revenue, but till such time your company reaches a stage where you have an in-house CFO. I think anybody who has aspiration to grow and make it really big needs someone playing this role. Till that happens, I have seen all the promoters wear that hat. They may not carry a visiting card of a business card of a CFO, but they are playing that role in some sense. It's choking their bandwidth, right? So why do that? Just leave it to someone who does only this. The promoter should really focus on his product development or go to market, not worry about cash flows, not worry about compliance. Let the finance team take care of it. Let the CFO take care of it. Then you have more clarity in, taking your company to the next step. So anybody who doesn't have a CFO and has an aspiration to grow, I think should have at least a fractional CFO.
We've dealt with, let's say, a good client and a good family office in some sense.
Right.
Any experience of a client who or whose problem was a big challenge to you, or absolutely new? It may not have been something which is unethical, but something which really puzzled you, with something which was which
Most common problem that I have is people say, hey, I know my business is profitable. I'm talking of companies where it's founder driven, no outside investors. I know I'm making profit, but I don't see where the money is. My bank balance doesn't show, but I know my pricing strategy. I know I'm charging a
so you have
decent.
to play Sherlock Holmes at that time.
This is a common problem I've seen in startups.
Huh.
And you'll be surprised. And the answers would be very basic. He would have either drawn money for personal use, and he doesn't have a clear this thing at what is personal, what is this thing. That is one problem I have seen. Second one is he's either over inventorized. He's bought more inventory than he needs. Well, it's still money, but not in liquid form, in form of inventory. So his bank balance is not showing it, but he has enough inventory. He's got a lot of money stuck in as debtors. His collectibles. Yes, he has a great balance. He has a great P&L which shows profit, but the money is not coming because they're in form of debtors. This is something that we do see. And in personal CFO, we've seen people make foreign investments. They don't disclose it in their income tax return.
Right.
Reason being, they have not given that information to the CA. It's not the CA's fault who's done the tax filing. He does tax filing basis on input that you give. And
So is that intentional sometimes?
no, it's not intentional. They would have thought, hey, it's a foreign investment. So why
This
is
doesn't
India?
come under the realm of-
They would have ignored it.
Yeah.
Or they have 2-3 fund managers. One would have, the completeness. And more often than not, nobody wants to cheat, right? Yes, if there's a possibility to optimize tax is different. But intentionally, nobody would want to do it, especially when they know it's a serious offense. But it happens because, it's not on their radar. Things like this happen, and, that's where we see a lot of gaps.
Let's say with a cricketer, with a sports person, do they also have CFOs and
I'm sure, because they have multiple source of income, various countries. They invest in startups. Of cricketers who have restaurants, so they have business income as well.
Yeah.
They earn out of their vocation as well, right? They give talks, and they earn money from there. There's a GST angle there. I'm sure they would.
So let's of course hope that people who are watching this episode, no matter whether they are sports people or from the MSME sector,
Right.
or any thing that they think are not, they're not yet there,
That's right.
to want to have a CFO or to a multifamily office, change their perceptions, because this is what the episode also intends to do, to open eyes to probably requirements and also how things can be a lot better. Yeah.
They can be ready now. I know they're going to make it someday, right? So don't grapple around after you're successful. Just have your systems in place. It'll be a lot easier to
That
enjoy your success.
aspiration can be a great note to end this conversation. Thanks, Sreedhar, for
Thanks.
being on this podcast of Keeping Wealth Wise.
Thank you.